Hello everyone, and welcome back to the Lumley Trading Channel. Today, we're going to talk about one of the biggest events in world history, the Great Depression of 1929. This event had a massive impact on the world and it's still felt today. So let's take a closer look at what happened and what effect it had on the world. The Great Depression of 1929 was caused by a combination of several factors, including stock market speculation. In the late 1920s, many people invested heavily in the stock market, leading to an unsustainable stock market bubble. When the bubble finally burst in 1929, the result was a sharp drop in stock prices, known as the stock market crash of 1929 or Black Tuesday. Overproduction. The growth of industry in the 1920s led to overproduction, which created an excess of goods and decreased demand for them. This caused a decline in sales and profits, which in turn led to a decrease in investment in production. Bank failures. The failure of many banks due to the stock market crash and poor lending practices led to a decrease in the money supply, making it difficult for people to borrow money and pay off debts. This further weakened the economy. Agricultural distress. The agricultural sector was hit hard by the Great Depression, as crop prices fell and droughts affected crops in many areas. This led to widespread poverty in rural areas and decreased demand for goods, further weakening the economy. Unequal distribution of wealth. The unequal distribution of wealth in the 1920s meant that the majority of the population did not benefit from the economic growth of the period. This lack of consumer spending contributed to the slowdown of the economy and the onset of the Great Depression. These factors combined to create a worldwide economic downturn that lasted from 1929 to the late 1930s, affecting millions of people and having massive consequences for the global economy. The Great Depression of 1929 had significant and far-reaching repercussions, both in the United States and around the world. Some of the most notable effects of the Great Depression were high unemployment. The Great Depression caused widespread unemployment, as businesses closed and workers were laid off. Unemployment reached its highest levels in the early 1930s, with an estimated 25% of the American workforce without a job. Homelessness and poverty. The high levels of unemployment and declining wages led to widespread homelessness and poverty. Millions of people were unable to afford basic necessities such as food, clothing, and shelter. Decreased consumer spending. With millions of people out of work and struggling to make ends meet, consumer spending decreased dramatically. This further weakened the economy and made it more difficult for businesses to recover. Bank failures. The Great Depression caused a wave of bank failures, as depositors panicked and withdrew their money. The loss of confidence in the banking system led to further economic instability. Agricultural distress. The Great Depression had a particularly devastating effect on farmers, as crop prices fell and droughts affected crops in many areas. This led to widespread poverty in rural areas and decreased demand for goods. Political and social upheaval. The Great Depression contributed to political and social upheaval around the world, as people sought solutions to the economic crisis. In some countries, this led to the rise of totalitarian regimes and the outbreak of World War II. These effects of the Great Depression had long-lasting impacts on the global economy and society, and led to significant changes in economic policy and the role of government in the economy. In summary, the Great Depression of 1929 was a global economic crisis that lasted from 1929 to the late 1930s. It was caused by a combination of factors, including stock market speculation, overproduction, bank failures, agricultural distress, and unequal distribution of wealth. The Great Depression led to widespread unemployment, poverty, homelessness, decreased consumer spending, and political and social upheaval. The impact of the Great Depression was felt around the world and led to significant changes in economic policy and the role of government in the economy. The Great Depression is widely considered to be one of the most severe economic downturns in modern history.